Can you hear me? Yeah. So I'm not home, right? I just had to take an excuse and just use this place for tonight. All right. I'm still in the mainland, but we have to have the class regardless. If you can hear me, please identify. If you can hear me, let me know if you can hear me. All right. I'll be sharing my screen right away. I'll be sharing my screen right away. Okay. So welcome to November's batch mentorship. Right. Today will be just an introduction. We're going to go through what we have for this batch. Okay. This batch promises to be very much impactful, and I trust God that we're going to produce more consistently profitable traders in this batch. The last batch we have produced consistently profitable traders. Yes, we have been producing consistently batches. So I trust God that this batch will not be an exception. We will also produce consistent, profitable traders. Okay, so let's go into the day. All right, so I'm going to download the course that we have. I'm going to go through them one after other. So we have 4 weeks for class and 2 months for mentorship. In that 4 weeks, we're going to be talking about strategy. 4 weeks is going to be about strategy, how to execute and manage your trades. Right. Well, in between the classes, I'll also be chipping in risk management and psychology in between the classes. All right. But we are going to be focused the second and the third month will be purely on risk management and psychology. Okay. Yeah. Hey, my guy. So, can you see my screen? Confirm if you can see my screen. Confirm if you can see my screen. Yes, confirm if you can see my screen. So, I want to go through. What we have here for. Yeah. So, downloads. Yeah. Good evening, Samuel. Yeah. Just going through what we have for the course outline. Okay. Yeah. So this is what we have. So for week one, In the first month, which is strategy for week one, we're talking about market analysis. Market analysis. Yeah, so sorry, I'm in a very I'm outside, so distractions here and there. I'm still on the mainland. So pardon me for tonight. Yeah, so week one on strategy month, we're talking about market analysis, types of market analysis, right? We have technical, fundamental, and sentimental. Then we're talking about the rule of engagement, DLC. And I want us, for those that are already my old students, they will understand what DLC is. But for those that are very new, okay, we get to understand what DLC is. So about AMDP, accumulation, manipulation, distribution, and pullback, right? Talking about, yeah, week two, how to build a trading plan, setting our trading goals, our trading rules, our trade entries, okay? Talking about risk to reward ratio. Then week three, we're talking about, so we have day trading, we have swing trading, and position trading. But what we'll be doing is day trading and swing trading, all right? Then we'll be back testing and forward testing our strategies, all right? Week four, execution and refinements, journal, blah 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 blah. So month two, we focus risk management. We will go deep into risk management month two, while month, okay. So, but basically, the first month, which is this month, we are purely on what? On strategy. So let me give you guys graduation speech as I just entering. Okay. So imagine you are already in the third month. So we have November, December, January. So imagine you are in the month of January. You are graduating from Wiser Pips Institute. So I'm telling you, congratulations, Wiser traders. You have made it through this intense journey of mastering strategy, risk management, and trading psychology. But remember, this is just the beginning. So the fact that you finished from this institute doesn't mean that you have known it all. This is just launching you into the financial market. Okay? And I want us to know that success in the market is not about quick wins. Trading success is not about quick wins. Will you win? Yes. Will you make money? Yes. But it's not quick wins. It's not a get rich quick scheme, but it's a get rich eventual eventually scheme. It's not a get rich quick scheme, but it's a get rich eventually scheme. If it's about money, of course you make money, but it's not going to be quick. So don't bother yourself on how fast will I make money. Don't ask the question, when will I start making money? No. The question you should be asking yourself is, am I understanding this? Am I mastering this skill set? The question to ask yourself is, am I making progress in my knowledge? Am I becoming consistent in my strategy? Am I now good to analyze? Am I now good to execute? Am I now good in my risk management? Am I now good in my psychology? These are the questions you ask yourself, not when will I start making money? If you're asking yourself that question, or if you're thinking of that question, you have gotten it wrong from the beginning. I tell my students, if you want to make money at the beginning, go and do copy trading, go and do partnership. You make money almost instantly with copy trading and with partnership. But to be a trader, to learn the skill sets is not quick. It's a process. It's about consistency, discipline, and resilience. Do you know what resilience is? Resilience is bouncing back despite failures, despite losing streaks, despite your mistakes, because you make mistakes, right? You make mistakes as a new trader. So, despite the mistakes, you need to bounce back, resilience. So, you will learn how to protect your capital, how to balance risk and reward, because forex trading is a risk to reward business. I have a love language. If I'm making sense. If you are following, I want to see fire on the chat box. If what I'm saying so far is making sense, I want to see fire emojis. Forex trading is a risk to reward business. Forex trading is a risk to reward business. So meaning that there's going to be risk involved, right? Losses will be involved. Risk. I'm not seeing fire emojis. I'm not right reward business. And it's important that we should know that is a business is a skill set where we deal with emotions, right? The market will test your patience. The market will test your confidence, your discipline. The market will test your consistency. This is what makes trading hard in the quote. Is what makes trading hard in quotes. But when it comes to strategy, it's simple. When it's you are expected to have you are not just traders. The job of a trader is to analyze. One, the job of a trader is to execute. So it means you are an executor. Then three, the job of a trader is to manage. It means you are a manager. So what are you managing? Your risk and your emotion. All right. What are you analyzing? Technical analysis or fundamental? What are you executing? Buy or sell? So by the end of this 3 months, you are not just a trader, you're going to be a risk manager, you're going to be a disciplined executor, and you're going to be a good analyst, not just side analyst, not just a roadside analyst. All right. Now, these strategies we are going to give you, they help you not only make profits, but also your psychology. Okay, but psychology will determine whether. So this line says, let me read what this line says. The strategies we covered will help you profit, but your psychology will determine whether you these profits. Okay, the strategies will help you make profits, but your psychology will determine if you will keep those profits. Right? So keep testing, keep refining, keep learning from your trade, win or loss. And always remember the market reward those who stay prepared and adapt. The market reward those who stay prepared and adapt. To stand with the 1% requires continued effort and smart decision. The goal, the vision for us is to be at the top one. The vision for us as wiser peeps is to be at the top 1%. As you move forward, keep aiming not just to be better trader, but better individual. So one thing I love about trading is trading makes you be a better person. Trading makes you to become a better version of yourself. Trading helps you to become a better version of yourself, not just making money. Okay? You are the future of trading. Everybody, type on the chat box. I am the future of trading. Everybody. I am the future of trading. I am the future of trading. Everybody, type on the chat box. I am the future of trading. I am the future of trading. I am the future of trading. Yes. Congratulations. Welcome to the top 1%. Welcome to the top 1%. You are the future of trading. I am the future of trading. I am the future of trading. Yes. Welcome to the top 1%. I am the future of trading. Everybody. I am the future of trading. Yes. So today's going to be, I'm going to dive into introduction. I'm going to, okay, I'll just touch little of it, so at least you will have gained something as value. I want to see everybody type, I am the future of trading. I've seen just only 2 persons. I am the future of trading. Yes, I am the future of trading. So now, next thing I want to hear from us, I want to know what are your expectations in this mentorship. I want to hear from you guys. What are your expectations? What do you expect? So that I will not be the one just bringing my expectations on you guys. I want to know what are your expectations by the end of this mentorship. Where do you want to see yourself? What are your expectations? So I can also work with that expectations and ensure that it is being fulfilled. What are your expectations in this mentorship? I want to hear from you guys. What do you expect from this batch? I'm taking notes of them. I'm taking notes. I'm taking notes. I'm taking notes. Or if you don't have expectations, I will just assume that I'm going to just work with my expectations for you guys. But I'm sure expectations, expectations. What are your expectations? What are your expectations for this batch? I'm waiting. What are your expectations for this batch? By the end of this mentorship, I would like to become a great trader. Okay, to be a disciplined trader and be good in my psychological life of trading. Okay, so I have one to become a great trader. All right. Number two, I have to be a disciplined trader and be good in my psychological life of trading. Okay, to be a disciplined trader, to be a disciplined trader and what be good in my psychological life of trading. Good. Psychological life of trading. All right. Who else? Who else? Who else? Are there only two persons on this call? What are your expectations for this match? For this, okay. All right. No problem. So if there are no more expectations, let's move into the deal of the day. Why I'm expecting others to give expectation. Now I want to tell us that to become successful is not magic. Is not what magic. I want you to know that you're going to put in the work. To become great is not magic. You what? Put in the work. And it's not as if you're going to work all day 24 hours. So I want you to know that every single day you must have at least 1 to 2 hours to study. Write that down. You must have at least, I didn't say at least. You don't study at all. At least 1 hour or 2 hours. Everybody write on the chat box 1 hour or 2 hours every day, including Saturdays and Sundays. Okay, number three says my expectation is to what get the best from this course and be a better trader in future by following your guidance. Okay, okay, okay. Noted. Noted. So what you will do for me is you are going to assure that you commit 1 hour minimum every single day. So write on the chat box 1 to 2 hours, 1 or 2 hours every single day without fail, including Saturdays and Sundays. So your 1 hour can be 30 minutes in the morning, 30 minutes at night. It can be 20 minutes, break it down into the day. Any how you want to do it, but you must study for a minimum of 1 or 2 hours every single. And I'll tell you what to study. It's not as if I'm telling you what to study every day. So you know that you're not to study. Yes, including Saturday and Sunday. Okay? Including what? Saturday and Sunday. Including Saturday and Sunday. Now, let me now tell you what to study every day. One thing you must do every day, once you have started teaching you strategy, is one, study the charts. Everybody, right? What are you studying every day? One, study the charts. Number one, study the charts. Every single day, you are studying the charts at least 15 to 30 minutes. In that 1 hour, your 15 to 30 minutes is what? Studying the chart. Like I said, I will tell you what to study on the charts. Okay? I'm just telling you the things that you'll be doing. What will I be doing every day? Number one, I'll be what? I will study the charts. Okay? Number two, what will I be doing every day? I will listen to interviews, trader interviews, or a podcast trading, whether interview or a podcast. And I'll send you what to listen to, or you can discover yourself. Okay? So listen or watch traders interview. Write this on the chat box as I'm listening to you guys. Listen or watch traders interview. That's number two. Number one, I said about study the charts. Okay. Number two, listen or watch traders interview. Number three, read trading books. Read trading books. Read, read trading. Three things majorly that you'll be doing every single day. Studying the charts, listening to traders interview, reading trading books. So in a month, at least you should have read 1 or 2 trading books in a month. And it's not reading for fun. You are reading to apply what you are learning in the book. What you are reading in the book is what you apply in your trade. So you are not reading for counting. I read book this month. No, you are reading to apply what you read in the book into your trading life. So you are not reading for fun. I sent a book to the group, right? Who got the book I sent to the group? How many of us have gone through? I sent that book when we started this month. The I sent it. The first time I sent it was October 15th. Who has started reading the book? The Secret to Emotion Free Trading. Who has started reading the book that I sent to the group? Who has started reading the book I sent to the group last month? I sent a book called The Secret to Emotion Free Trading. Who has opened the book? So that book is what we are going to start reading. Okay. So that book we will start because we will start. So let's use that book for this month, right? So that book. So I'm going to declare now that the book for the month of November is what? The Secret to Emotion Free Trading. So let me write down in the chat box. That's the book for this month. The secrets, the secrets to what? The secret to emotion free trading. You know what it means when you say emotion free trading? We know that trading is emotion, right? Trading, we can't do without emotion in trading. But there's a way to train your mind to trade without emotion. That means you are neutral. When you lose, you are not you are not sad, you're not crying that yay, I've lost. Oh. And when you win, you are not overly excited. You have a neutral mindset. It's called emotion free trading. Will to develop the mind, you won't completely eliminate your emotions. You will manage it. So that book is a very powerful book. Every single day you are reading the book, you can divide it into number of pages you can like, right? Every single day you're going to watch interview of traders, and every single day you study the charts. Am I communicating? We're making sense. I want my love language. Given the fire emoji. Fire, 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 fire. Let me have some fire. Let me have some fire if I'm making sense. Let me have some fire emojis if I'm making sense. Okay? The numbers are dropping and increasing. Yeah. So let me have some fire emojis if I'm making sense. Am I making sense? Okay. Making sense. Making sense. Making sense. All right. So I'm going to start this night by just introducing us to, for those that are new, babypips.com. If you are completely new here, let me see. I want to know my audience. Aside from those that, okay, if you just joined us this month, last month, analysis, that means you're completely new. Let me see you guys. You're completely new, but you have been joining us in the 7 a.m. You have been joining us in the 7 a.m. analysis. Let me see. You're completely new, but you have been joining us in the 7 a.m. morning analysis. Okay. So there is a material for, because we don't do theory in the mentorship. We don't talk about theory, we talk about practical, straight to the point, practical. So if you want to learn about theory, we direct you to the materials that you read theory. Okay. So babypips.com is a material for understanding everything theoretical about forex. So I want you to note this site down, babypips.com. If you don't read unnecessary, please, material. It might look boring, it might look stressful, it might look not what you want, but that is, you are a beginner for crying out loud. Okay? You are a beginner, and I can't be teaching you theory. I don't have that time to teach theory. Time and waste your time too. And you will be bored. Save me, you need to just read about it. But I'm going to give you what exactly to read about. Okay? So learn Forex, when you come to learn Forex, under this, first of all, I want you to what? To sign up on the site. You sign up and verify your email address, track your progress as you learn. So once you sign up, you get verified from your email. Okay, then you start learn Forex. Are we together? Are we together? we together? I think my internet is Jerry. Hey man, you have Android. Android to I need to charge this my. Okay. Oh, on this site, okay, this is where you learn everything you need to know about what the theory part. I think the network is very slow. Is dragging me behind. The network is dragging me behind. So I want to show us where to. Okay, yeah. So School of Pipsology. School of this we are going to learn so many things about theory. What is forex? How do you trade forex? When can you trade forex? Who trades forex? Why trade forex? So I want you this one, two, three, four, five is a compulsory for everyone to go through as a beginner. This one, two, three, four, five. Now, what is forex? When you come to what is forex, it's going to bring out a list of outlines. Okay, under what is forex, look at what it's saying. What is forex? What is traded in forex? Buying and selling currency pairs, market size and liquidity. Okay, then how to trade forex. Just go through all this. Okay, it's not as if this will help you. It will help you in your knowledge because you are a trader. You need to be knowledgeable about. I'm not just coming to teach you how to make money, right? You have to know your. This is your industry. This is your skill. You must know. If you are not ready to read, you're not ready to become a trader. You should read. So go through all this. You can say every single day. Okay. So part of what you'll be doing too is going through these courses. You can add that to number four. And maybe after reading your trading book, you come and read. Please talk to me. Talk to me. Is that clear? So that's the guideline for. Then after that, once you are done with that, I will tell you the next thing to do. Okay, we take it step by step. Now look at this quote. It says, "Life unexamined is not worth living." Now I coined this quote to say, "Trade unexamined is not worth taking." Everybody write that on the chat box. Democritus said, "Life unexamined is not worth living." ProFx says, "Trade unexamined. Trade unexamined is not worth executing." Trade not examined or trade unexamined is what is not worth executing. Perfect. So before you take a trade, before you buy or sell, the question is, have you examined the trade? Why are you buying? Why are you selling? Have you known your direction? Have you gotten your location? Have you gotten your confirmation? Those are the rule of engagement. My old student knows already. So An examined trade is a trade that's passed through the test of DLC. Everybody, write that down. Everybody. An examined trade is such that has passed through the litmus test of DLC. Oh my God. An examined trade, an examined trade is the trade that has passed the test of DLC. So a trade that is worth executing, if you have not answered the question what, where, and when, you are not allowed to take that trade. Trade unexamined is not worth executing. No. Yeah. Do you understand? So for the newbies, we are just starting. We are just starting. We are just starting. Okay. So for the newbies, just come here and read about all this. So let me go through. Let me go to the next. So this is just course 1 of 11, which is preschool. Okay, preschool for theory because I won't come back to theory again. Oh. Once I leave theory, I'm going straight to practical. Course 2 of 11 talks about what kindergarten, which is the types of brokers. You want to know brokers and their advantages. Come to course 2 of 11 and study. Don't come and ask me questions if you have not studied though. I won't answer you. Don't ask me questions if you have not studied. I won't answer you. Now, when you come to types of analysis, okay, if you study, your question will reduce. If you study, your questions will reduce. Like I said, we are going to be studying the chart every day, right? For us to train our eyes to see. So, the type of analyst that studies the price movement on the chart are technical analysts. The type of analyst that studies price movement on the chart are the what technical analysts. While those that talk about news, fundamentals, economic reports, political factors, events, they are the fundamental analysts. Okay, then those that talk about how the market players feel, sentiments. Okay, how does the investors feel? You are gauging your information about the feelings of sentiment of the investors. Okay, there are tools that will make you know how a certain investor feel. There are tools, there are resources on sentiment analysis. Okay, there are tools. So that one has his own story on his own. Now, there's an argument of which one is the best. Okay, we have argument on which is the best. So read about it. Read about it. Types of charts. We have line charts, we have candlesticks, we have bar charts. So read about candlesticks, about line chart, about bar charts. Types of charts. All right. This one is compulsory. You must read about this. Types of charts is compulsory to read about. Course 2 of 11 under kindergarten. You can say that kindergarten of forex is like university of some schools. Do you understand? So kindergarten is looking as if you're already entering deeper level self. That's course 2. Now, course 3 of 11 is what elementary beginner's guide to technical analysis. Course 3 of 11, I love this part a lot. Yes, yes. An examining trade is a trade that have passed the test of DLC. I love this. I love this. I love this. I love this. An examining trade is a trade that has passed the test of. Wait, who believes what I'm saying? If you believe what I'm saying is true, forget I'm the one saying this thing now. If you believe that what I just said is true, that you can't tell me you have traded if you have not answered the question, direction, location, and confirmation. If you believe what I'm saying is true, okay, I want testifiers in the house. Yeah, am I just giving quote, or I'm actually saying what is actually the fact? DLC, talk to me, talk to me, talk to me. Yeah, chief. Am I really saying the truth? Are we together? Okay, let's move, let's move, let's move. While I get the responses. While I get the responses. So, under the beginner's guide for technical analysis, if you are a newbie, okay, you can start by understanding support. We will teach this also, we will teach it. Okay, we will teach how to understand support and resistance. Okay, how to read candlesticks, how to use Fibonacci levels. We don't use moving averages, but it works. In fact, some colleague of mine that trade for the banks use moving average to trade for banks. Some use alligators, indicator. Okay, so indicator works. Please don't join those that say indicator don't work. Okay, we don't use moving average, but it works. So, but what I will advise you to read under this course 3 is what support and resistance. Read support and resistance levels. Read Japanese candlestick. Read Fibonacci. You must. If you ask me any question, I will know that you have not read what I'm saying to read. Okay? So if you read question to me, I'll just direct you to course 3 or course 4, because that's where your answer is. First, under course 4 of 11, just focus on important chart patterns only. Under course 4 of 11, only focus on what? Important chart pattern. Don't read this or this for now. Only focus on what? Important chart patterns. Okay? Under course 5 of 11, don't focus, skip course 5 of 11. Skip. Someone type skip, 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 skip. Okay, no, no, no. Read Elliott Wave theory. Yes, 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 yes. Read only Elliott Wave theory, because Elliott Wave theory is what we use for our market structure. Okay? Elliott Wave theory helps us to understand more on what market structure. Just read about it, but don't go too deep. Just glance through. All right. If it's getting if it's getting too complicated, just leave it. All right, just leave it. Our 0, 1, 2, 3 is an Elliott wave theory concept, so to help you. Okay. Then is you can read about all this. So trading divergence, market environment, out, fundamentals, trading crosses, all these ones. I'm giving these are extra readings. Okay, you can do this by the side. You can just do this by the side, but they will help you in your knowledge. They will help you in your knowledge. Okay. So under course 7 of 11, read about all this. So read about market sentiment, trading the news, and carry trade. Look at what it says here. Learn how to gauge whether the market is bullish or bearish, how to trade during the news releases, and blah blah blah. So for those that want to go deeper into fundamentals, this is a starting point. Like I said, this is just by the side. By the side. This is personal studies. This is personal studies. Okay. Course 8 of 11, talk about US dollar index. In the 100 days group today, I mentioned that we have every currency has their indices or their index, right? Every currency has their currency index. Okay. For US dollar, we have the DXY. For Great Britain pounds, we have the BXY. Okay, and every index tells us what the economy is doing technically. So for DXY tells us what the US dollar economy is doing technical wise. Okay, technical wise, US dollar tells us, DXY tells us what, yeah, yeah. DXY tells us what the US economy does technically. So if you don't have time to read about the economy on the US, just study U DXY. Do you understand? DXY. Now, to know what the Great Britain pound economy is doing, study BXY. Okay? To know what the Japanese economy is doing, study JXY. So, JXY, I'm giving you guys hot premium information. JXY is for what? JPY. To know what the Japanese economy is doing. BXY is for what? GBP. While DXY is for what? USD. Okay, so we have all of them like that. So once you want to know what this economy is doing, study that in this index. You have a glimpse. Let me give an example. Let's go to JXY. Let me be practical. Let me be practical. Let me go to JXY. 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 So I will type JXY on my trading view. I'll type JXY on my trading view. You can see what it says. Japanese yen currency index. Japanese yen currency index. Japanese yen currency index. Now, once you know JXY and you know DXY, it can help you to better trade USD JPY. Oh, who got that? Who got that? Who got that? Once you know JXY, that's what Japanese currency is doing, and you know DXY, what US economy is doing, it helps to hold your trades long term. I'm already teaching you guys. I'm already entering my swing trading note already, but it's fine. I come again for you to know how to hold trades. Okay, to how to hold trades when we come to swing trading. You need to understand individual currencies from their index point of view. Who got what I just said? For you to be able to swing and hold trades as a technical trader, you need to understand what JXY is doing long term and what DXY is doing long term. You need to understand must. Look at this now. This is JXY. This is JXY. This is JXY. So you can see that currently JXY is trying to is dropping, is bearish, currently dropping, okay, dropping. So when GXY drops, we expect DXY to what? To buy. So that's why you see USD JPY charts buying. So what is this on our on our GXY? What do? We can mark our locations here. This is a demand zone. I'm on weekly time frame now, right? Demand zone and fair value gap. For the new traders, don't worry, we are still going to break down all these concepts. How to know demand zone, how to know fair value gap. I'm just giving you an example of how this index works. Okay? So for JXY, I will just mark out my what locations. Okay? And wait. So we expect this to come to demand zone, drop the more to start buying. Let me see what monthly time frame is saying. 1 month. You can see, right? JX have been dropping from, they have been bearish since 20, 20 since 2020. Look at, JX have been bearish since 2020. Look at the bearish. Okay, let me put my, okay, my screen. Oh, sorry. That's the network. Oh, can you see my screen now? Yeah, yeah. I got a message. I got a message. Can you see my screen now? I got a message. I got a message. So for since 2021 or 2021, yeah, JPY has been bearish, has been dropping. Okay, so JPY is weak. JPY is weak. That means DXY is strong. So we have known that. So what we just do is we mark the structure for sale. We keep on marking what, break of structure for sale, break of structure for sale. So we are still bearish. JPY is still weak. JPY is what, is still weak. Planning to break out from this low, okay, for a structure break. So JPY is weak. Okay, we are selling. Now, what of DXY? DXY, DXY. You can see DXY monthly. We are what, bullish. Monthly DXY what, bullish. You can see that we have tested this fair value gap multiple times. I have I have a fair value gap indicator on my chart that makes me know without even drawing it fair value gaps. You can see multiple times we have tested this fair value gap, and again we have this same test. So DXY is bullish. DXY is what, bullish. JPY is what, bearish. So we expect to see DXY buy in the coming months. Okay, I'm giving you a swing trade point of view now. This is the charts. Okay, this is DXY. This is what, DXY, bullish. Come to your daily time frame. We might have some pullbacks. Yes, we have some pullbacks, but we know the direction. We have some pullbacks, but we know what, the direction. Oh Jesus! So we keep on marking locations for bullish structure until it is being what, being destroyed. So we expect to take out. This is a weak eye now. We expect this eye to be what, to be taken out. This is a weak eye as liquidity, to take out as liquidity. So DXY, we are what, we are bullish. I'm not trying to show. I'm just trying to show you. I'm trying to show you the power of what, index. All right. Trying to show you the power of index. So that's all. That's that for that. So let's come back to the charts. Yeah. Let's come back to our learning. So we have, so read about this currency correlation. It will help you. We also have what is called intermarket correlations. So you need to understand that other asset class like stocks, bonds, commodities, they also affect forex. How do I mean? Oil is a commodity. Gold is a commodity. The country that produces oil is Canada. The country that produce oil is Canada, and USD card can be affected by oil as a commodity. Gold. For gold, the country for gold is Australian dollar, AUD. So commodity being gold can affect AUD, USD, and so on and so forth. So read about what this. Then we also have undergraduate junior. This is very important. So how to develop your trading plan. In the week two, we come to this place. In the week two, we come to developing your trading plan in week two. What type of trader are you? We don't start that stuff. Oh. The mentorship class.
You don't start that.
Yeah, it's today. But I'll send you the link. So we are recording the class now. So you learn about the type of trader you are. Okay, this is going to be our week two curriculum. So we're going to read about this week two. Okay, right then. Okay, second to the last, we have risk management. Okay, I love this one. The number one cause of death of forex traders. Let's look at it. What is number one cause of death of forex traders? Risk management. Who agree with me? Over leveraging. The number one cause of death of forex traders is risk management. Over leverage. Over leverage. Yes, now debt. Debt means your account blow. That's what debt. Your account blown is debt. Yes, when you blow your account, that's debt. Yes, yes. So you just need to read about this, right? It's gonna make sense. Read about it. Then finally, the most common trading mistake new traders make. Every end of every page, if you refresh this page now, a new quote to pop up. So this says, even if you're on the right track, you will get whatever if you sit just there. Who believes this? Even if you're on the right track, you will get one over if you just sit there. Okay? So don't just sit. Do something. Oh, I'm tired. Okay. So great. So I'm going to start. Okay, I'm done for today. I'm done for today for introduction. So from next week, this is going to be Monday. Our classes will be Mondays, Wednesdays, Fridays, 7 to 9. So this is just like an introduction to put us abreast of what we'll be learning. Like I said, the first 4 weeks is just purely strategy. I'm going to be breaking down every concept from scratch, from market structure to demand to supply to other block. Okay, so everything we are going to be doing is going to be under what DLC. So you know that we are not just so I want us to be able to know where everything we are going to be learning is from. Like I said in one of my quotes, that the common factor of every trading concept and every trading strategy is DLC. The common factor of every trading concept, the common factor of every strategy is what? DLC. DLC is a common, that means bring any trading concept in this forex industry. It is either under direction or location or confirmation. So I'm helping you to filter the noise to help you to jam pack everything so that you know, okay, this is under direction, this is under location, and under what? Confirmation. So let me just break them down for you. Okay, let me just break them down for you whilst we are wrapping up for today. Under direction, we are talking about market structure. Okay. Under direction, the concept we'll be talking about is what? Market structure. Under direction, the concept we will be talking about is what? Market structure. And under market structure, we'll be treating things like uptrend. Under market structure, we'll be treating uptrend and downtrend. Very important because that is the two types of market structure that we'll be talking about. Also, we'll be treating what is called external and internal structure. External and internal structure. External and internal structure. Okay. Then also we'll talk about, of course, break of structure, break of structure, break of structure, break of structure. Very important, break of structure. Next, we will talk about change of character, change of character, and change of trend. I'm not sharing my screen. Am I not sharing my screen? Am I not sharing my screen? Is something wrong? Am I sharing my screen? Yes or no? Wow. Okay. So let me stop sharing and share again. Don't worry. I've said that next year I dey go Dubai. Next year I'll be streaming. I'll be doing class from Dubai. So all these all these naughty in and outs, right? I'll be saying I from Dubai. I Melkis. I Samuel. I Mr. Tony. I from Dubai. I run the Japan. Okay. Oh. So let's continue. So I was saying under direction, market structure is the trading concept that we are dealing with because direction answers the question what. Direction answers the question what. So under direction, market structure is the concept we are dealing with. Now under market structure, I want us to just take everything at the whole. So what we'll be talking about under market structure. So these are the things: uptrend and downtrend, internal and external structure, break of structure, change of character and change of trend. Okay, change of character, change of character and change of trend. Change of character and change of trend because they are two different things. Change of character is different from change of trend. I will tell us. Okay, so let me just do that briefly. And let me show you the difference. Now look at this. When I am buying, okay, this I low. The moment I have this is change of character. But it's not a change of trend. If look at this now, I continue buying. You can see. So we changed character from bullish to bearish, but we did not change trend. We still broke structure to the upside. So yeah, we changed character. We took out this low to be a lower low as liquidity, but we still broke structure. We still broke structure. So what we had was a simply change of character. This was the simply change of character. But when we have a change of trend, is when we have a change of character, okay, and a break of structure to the downside. That means the low was maintained. We didn't take out the high, it was maintained. So yeah, we have a change of character as a liquidity, and also so that liquidity now became a change of trend because it has maintained the previous high as a supply and it broke structure. Okay, that is the difference between change of character and what change of trend. For a change of character without a change of trend, it didn't have what. Do you get? So if a complete confirmation for a change of trend is where we have a change of character and a break of structure, it must be complete. We have a change of character and a break of structure. That's a complete confirmation for a change of trend. But the case where you have change of character and a break of structure, it is not a change of trend. Is that clear? I'm not sharing my screen again. Please confirm, confirm, confirm. Am I sharing my screen? Okay, yes, it's clear. So do we get the change of character and the change of trend now? So we can see that they are different. So we are going to learn how to identify this on the chart. And the beauty of this is it is repeated. Once you have gotten it once, just keep on identifying. That means you need to just keep on studying and practicing until your eyes is trained to see. Everybody, type this on the chat box. I have a quote that I say to myself. I train my trading eyes to see. I train my trading eyes to see. Who knows this quote? I train my trading eyes to see. The market is as clear as day to me. One of my favorite quotes. I train my trading eyes to see. The market is as clear as day to me. I train my trading eyes to see. The market is as clear as day to me. Everybody write it in the chat box. Everybody, 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 everybody. I train my trading eyes to see. The market is as clear as day to me. I train my trading eyes to see. The market is as clear as day to me. One more, one more. What's one more? I train my trading eyes to see. The market is as clear as day to me. I train my trading eyes to see. The market is as clear as day to me. I train my trading eyes to see. The market is as clear as day to me. Come on, come on, come on, come on, come on. I train my trading eyes to see. The market is as clear as day to me. I want to see that on the chat box. Everybody, I train my trading eyes to see. The market is as clear as day to me. I train my trading eyes. Bro. Silas. I'm in class now. Sharp. I train my trading eyes to see. The market is as clear as day, just as the day clear, see everywhere bright. That's the way you should see. You should see the market. Demand zone must be clear to you. This is a demand zone. It must be clear. Market structure must be clear to you that this is market structure. Change of trend must be clear to you that this is a change of trend. Break of structure must be clear to you that this is a break of structure. Okay, change of trend. Now let me explain change of trend again. For us to have a change of trend, there must first be a trend. Okay? Trend. We have uptrend and downtrend. Uptrend and downtrend. For us to have a change of trend, there must first be an established trend, right? Please pay attention. Oh. For us to have an established trend, for us to have a change of trend, there must first be what an established trend. So at the established trend, if it's uptrend, it means I'm having higher lows, higher highs. I've taught you guys how to know what's a uptrend now. Low, high, higher low, higher high, higher low, higher high. Okay. Okay. But funded. Can I charge it now? Charge it now. Okay now, okay. But this is low. So let me know which time. But you understand, this is let me go slowly, but let me know which time. This is low, this is high, this is higher low, higher high, higher low, higher high. The moment that price takes out this higher low, it becomes lower low. That is a change of character. That means the character of higher low, higher high, higher low, higher high has changed. We now have a lower low. Now, after a lower low, if we now break structure again to the upside, this is not a change of trend. That means the trend still continues to the upside. Once I have a change of character and I have a break of structure, the trend still continues. That's one example. But in the case whereby I have a change of character, okay, and I maintain this low for a break of structure to the downside, this is a change of trend. So that means this change of character is now a change of trend. It's not just merely a change of character. It has now become a change of trend. Why? Because it broke structure to the downside and maintained the previous high. It maintained the supply here. I'm hungry. I'm hungry. I need to I need to go and eat. So I'm hungry. So is that clear? Change of character, change of trend. Change of character, change of trend. This change of character, if it breaks out, it's not a change of trend. If it breaks structure to the downside, it's now a change of trend. Is that clear? Samuel, Don't try. Ah, so let me just let me complete all this. Let me just complete for direction. I'll call it a day. Okay. So also under market structure, we'll be talking about premium and discounts. Very important. Premium and discounts is what we will talk about also. Okay. Under market structure, we talk about time frame analysis, which we call top down analysis. Time frame analysis, or what we call top down analysis. Okay. Yeah. There's some people call it fractal market structure. Now this is not English. They don't use English scatter us for this industry. Ah. But my goal is to help you to show you that we are saying the same thing. We are saying the same thing. So okay. So I think we are good here.
Big man. Big man.
So whether it is market structure,
You can't dey intimidate me like
no, no,
this.
no. These are their lives. Okay, so let's hold on now. No, digest this one. Okay, no wala. So let's hold on to this one to digest. Okay, so I'll stop here. I'll stop
Okay,
here.
extension no
Okay, I'll stop here. I should stop. Make I hang boots. If you leave me like this, I will continue till 10 o'clock.
wetin dey pay you wey dey bring you join. I
Oh.
no go stay.
Okay, let me hang boots here. Let me hang boots. Let me hang boots. Let me screenshot what I have here and send to the group. So we continue from where we stop on Monday, right? So whatever we learn from today, let's just make a hold on tight. Okay, hold on tight, hold on tight, hold on tight. Now is Mr. Albert on this call? Mr. Albert, are you on this call? Mr. Albert, are you on this call? I have a good news for you. Is Mr. Albert on this call? Mr. Albert, if you're on this call, I met with Femi M Trading. I told him that today you sent analysis to the group. He was very shocked. He was like, "Eh, Mr. Albert that was in our house. Which day was that? And could not didn't even know stop loss. Mr. Albert didn't know stop loss as at this time last month. But now Mr. Albert is analyzing and sending us signal. So yes, okay, you just joined. Ah, wow, wow, wow. Okay, just so I was saying, Mr. Femi is eh. Samuel is not like me. Oh. So you guys don't like me. Say make you leave. Make I teach you, guy. You don't like me. So Mr. Albert, you are doing well. You are doing well. If you can achieve this in just in a month, imagine what you'll have done in 3 months from now. I'm hungry. I need to go and eat. And my babe needs to also see me. I need to go and see my babe. Sorry. Yeah. So please, this is where we end for today. Um, go through the recordings again and go through this book. Go to the book I gave us to read it. Go to the site, maybe peeps. If you have questions, I'll open the group chat for communication. Right? Feel free to ask questions on the group. Okay. Group permission, send messages. Yeah, so you can send your message to the group. Right? Send the questions to the group and let's communicate. I get baby. Ah, guy, you know make I marry. I get babe. Oh, very soon I will get Ivy. Yes, now I'm live. Yes, I know I'm live. It's part of it. Trading is not about. It's not about money. It's about lifestyle. Yeah. If I want to do my wedding, I will invite you guys now. Abi, ah, make I dey hide my. ah, yeah. Omo, that's the spirit. No wahala. Yes, yes.
Come join me.
Yeah, yeah, yeah. Thank you so much.